What is up, everybody? Happy Sunday. Happy belated Thanksgiving. I hope everyone has had a wonderful extended weekend. I hope everyone did anything stupid over the last couple days. Obviously, everyone hopefully had a good Thanksgiving, had a good Black Friday. Hopefully audio and visual are good. I know we had a little bit of a hiccup, with Nick4ATick coming back into the trading world last Sunday. Wasn't planned, jumped into it. We figured it out. Everyone hung strong and, got some market prep in there. But yeah, I hope everyone has had a wonderful extended weekend. For me in particular, let's see. The Christmas lights are hung, the house is decorated, the baby has been fed, and daddy is home. So we're going to get some prep in. We're going to attack this week. It is a new month. It is December 1st. It is the last month of the year. So if you've been, holding out hope to finish the year strong, this is where it starts. And what a surprise. The market is trading at all-time highs. We had an air horn to close out the month and to close out the weird trading week with two half days on Thursday, at least for futures. Friday was a true half day, I think, for everything, but no surprise that, on low volume, on everybody else out doing their shopping and, doing whatever on Black Friday, I don't think it's even anywhere close to the deals we used to see, unless there's one thing specifically like a TV or a laptop or something you actually need. These discounts seem to be like they're any other week of the year. So, but yeah, no surprise that everyone in their mother's 401k buying the all-time high to close out the, or I guess the second to last month of the year as we ended November. All of our 401ks kind of responsible for that last little, 30-minute pump that we saw into the half-day close, on Friday. So where we're sitting, we're kind of in no man's land. As you guys know, you kind of get some passive buying to start the month. So if we continue to march higher, we shouldn't be a shock to anyone. We're trading at all-time highs. We're going to open Globex here at the all-time high, at least in ES. So a lot of things can happen. A couple areas that we're going to be looking at and talking about, I think, in the early part of this week. The biggest one is going to be pretty much around the November point of control, which is this large high volume edge here on ES. The specific price to be watching is going to be the spread between ES and SPX, because we all this volume basically kind of ping-ponging back and forth is SPX 6000. And as that spread has gotten smaller and smaller, this number will get more defined probably in the coming week. So that kind of 615, 620 spot is an area to watch. I think the actual spread going into tomorrow is probably 6015 or 6015. So that is, I could have put my pivot there. I just don't love the idea of kind of, watching who's in control at this much of a high volume node and even last week's points of control. So that is kind of why my pivot is pretty much sitting near the lows of that shortened week that we had. Around 59.80s. I would not be shocked, at least in the early part of this week. Yeah, we're at all-time highs, but if we were to rotate back to 6,000, if we were to lose it, if you saw some put buying coming in, it's a reasonable explanation or a reasonable situation could be us actually falling back towards 6,000, maybe even peaking back towards the previous week's low down here to 59.80s. So for me, I don't really want to get too bearish unless we start to see sellers really step on the gas below 6,000. and maybe go back and kind of potentially ping pong between 60/30s and all the way down to 5,920 is all in the realm of possibility this week. I would not be shocked if we saw a more outside move this week. I mean, just given the couple weeks of consolidation that we've seen within 100 points, for us to move another 100 points in either direction, I don't think should shock anybody. Whoa, that was weird. So that's one thing I'd be looking for. But until we kind of break out of this magnet that is SPX 6000, it's kind of sit on your hands, look for scalps, see if you can catch a breakout one way or the other. It's a tough trade. And as we said, with it being, December 2nd, so early part of the month, you're going to see passive buying step in from, institutions, from our 401ks, other things that are going to probably keep us a little bit elevated for the time being. A lot can happen. You guys know me. I don't love, if you were long any time this year of the 54 all-time highs that the S&P has made, you've been right more than you've been wrong longing the all-time high. So there's no reason to assume that that's not going to still be the case, especially when you take into seasonality in the early parts of December. With, the typical Santa Claus rally. Who knows? We may get one. We may continue this euphoric run that we are on. You got, for lack of a better word, shitcoin still being bid. So I have a hard time, really getting too bearish in this market with everything, every asset class, risk on, risk off. It doesn't matter. It's still pretty much being bid. So it makes sense to continue to get along with that ride. So if I'm looking to get long, though, I would probably rather do it. If you're going to do it, at least the first attempt, it's probably around that 6,000 level in SPX. So that 6,015 spot, more or less, just to try to get, you see if that kind of wall holds. If you lose it, like I said, we probably rotate down towards the previous week's low. And that could be a decent spot to try a long. So I'm not looking to long the all-time high, even though Nick's an idiot. And this has worked time and time again this year. So there's no reason to not necessarily try it again, especially if it rotates back down towards, these 2 weeks of kind of a value area high up here at around the 60/30 mark. It definitely is a safer long, at least to initially start the week. If you see kind of buyers defending, even in Globex, if we were to get a move down lower to kind of retest the breakout of Friday, a reasonable spot is there, right around 630, 632 to potentially try a long, at least in the early part of this week. If not, would not be shocked to see, like I said, this come down to that 6,000 SPX spot, maybe even to 6,000 on ES, just being the big round psychological number that we just cannot seem to get away from. But it's like I said, it's an interesting start to the week. I don't have much of an edge either direction. I do think we may finally kind of leave this larger consolidation zone rather that we've been in. Continuing to kind of retest these highs. At least we finally did make an all-time high. I was nervous in the early part of this week, and that's something we talked about last Sunday, was do not be shocked if we kind of come up here and potentially quickly fail, or if, on low volume, we just go do that again and again and again. Like at least it happened into the close on Friday. But with low volume, with the shortened week, it's hard to make too much of anything that happened the last, whatever you want to call it, 3 trading days. I know Wednesday was kind of a not event in the latter half of the day. It just seemed like volume kind of died, and then we just continued to drift higher. And obviously Friday being very similar, where you had a little weakness out of the open and then kind of chopped and moved along, and then we shot out of the cannon pretty much and just kept moving higher all day on low volume for the half day that it was. So head on a swivel. Like I said, no true edge either way, but I would be leaning towards finding dips in the lower part of last week's distribution to find a good long. I don't want to personally, it's just me, I just have a hard time longing 60/50 right now. I'd much rather try to long closer to 6,000 to see if I could catch a similar move even to what we saw on Friday, where we came down, kind of retested around SPX 6,000 and then just made a move higher and did not look back. So we shall see. And if this is the first time tuning in, guys, feel free to throw in some questions. We will gather them. I will get to some of them near the end of the show as we are continuing to move through this. If this is your first time catching Market Kickoff with me, this is a prep show. You're not going to see me take trades as the market opens here at or in about 5 minutes at 5 o'clock Central Time. I am not a Globex trader. I try to stay away from these type of markets, but we are getting prepped for the week. That's why we're talking about volume profile. That's why we're talking about some levels here, some areas of interest. And that's kind of the goal of this show, is to help get you guys an idea of, a way to potentially attack this week and things to look out for, at least in the big four. We're going to talk about some options. We're going to talk about earnings. We're going to talk about the data drops that are happening this week in the pre-market, as well as, if you've missed them, they are back. The gaggle of Fed speakers is once again providing their book tour, world tour, whatever it is, securing their jobs. If they're still going to be there under the new administration, we shall see. But everybody and their mother is back, providing some liquidity, some algo spasms, and all the other fun things that we love from our favorite talking Feds. So what just happened to my charts? Let me try to refresh. Am I still live? Let's see. Okay, we're good. It looks like it was my internet for a half second. I'm still live. We are good. All right, let's jump over to NQ. NQ not trading at all-time highs currently, but still had a very similar move into Friday's close. And NQ is kind of in no man's land. Again, this is an area that I don't have a decent edge. We're in a low volume node on the longer time frame up here near 21,000. We did not take out this week's high, or we could not make a new high this week, or even get back into this old kind of 2-week post pump Trump consolidation that we were having up here. So with that, you could very easily fall off this 21,000 level that we are going to probably open here in Globex, and potentially fall back into the last 2 weeks of distribution, somewhere between 20,000 all the way back up to kind of the 800-900 spot. So NQ continuing to kind of consolidate and move a little bit higher. Much of it is still going to depend. You guys, am I still here? Yes. Are we still live? Yes, I'm still seeing it in OBS. Everybody, we're fine. Okay, sorry. It was like spiraling on my other computer and I was worried for a second. So we are still good. So NQ opening Sunday Globex here in a couple minutes near the highs of the previous week. We talked about this last Sunday. It doesn't necessarily mean that it's bullish, but it's hard to want to be the first person to jump in front of the steamroller, especially after the move Friday, especially after what we know about, early in the month, the first couple days of the month, how you can have those. Good. We're all still good. How we can have those passive flows continuing to move us higher. So looking at this, if we were to continue to build any sort of volume above 21,000, I would not be shocked on a trip back up about 200 points to kind of go retest this consolidation range going back to the middle of November. So the big area to watch up there is going to be that 21,000 kind of 180s, 175 spot. To potentially look to see if sellers are there, are they present, or are they going to potentially re-offer in that spot and send us back down lower? Basically, the logic would be, if we start building, at the 21,000 mark, do we start to fill in this low volume node here, or do we just rip right through it and go back to this old consolidation range? So I'd be looking potentially for longs back down towards 20,900, 20,800s. In this kind of general area to try to get that trip to break out of this range from the previous week. It's very possible if we fail in the early part of tomorrow's session, we're going to go back and continuing to chop in this lovely distribution. I wanted to talk about this. This goes back weeks, guys, this area. Thank God we are starting to get some volume build at the value area high. But in the event that we were to lose this spot, actually with traders back this week, you've got all of this volume in this consolidation range for weeks, going back weeks, this larger range we've been talking about for a long time, between the 20,900s all the way back, I would say, let's call it here. Yeah, around 20,300, 20,200. So if you got a more outside move, and if it was to the downside, that's probably where we're headed. Maybe could possibly traverse a large portion of the last 2 weeks if you were to get the weakness back down. But the first place you'd find buyers is going to be 20,600s, 20,650 to be specific. So if you were to get weakness, that's probably the first spot I'm looking to knife catch, is about 300 points lower. And we are open. So let's take a peek here. So far, ES opening pretty much right around where we, I guess, finished the cash close, right around that 66,050s. But just kind of chopping around. NQ, kind of a 2-point spread and just chopping right around 21,000. So no surprise, we are actually opening for once in the last couple of weeks without a gap. So that's always fun. We don't have to worry about, hey, when will the gap be filled? Yeah, okay. Starting to slowly build some volume above, but that is kind of NQ. Like I said, I'd be looking for longs back towards 900. If we were to lose this spot at the high volume area, value area high, look for potentially that move back down to 20,600s, 20,700s to potentially find a decent spot to rebid. As you guys have seen in some of the some of these moves down off the open, they can be violent and they can be 100 to 200 points on NQ in all of 15 minutes and 10 minutes at times. So sometimes it's better just to, if you're not already in a short and something like that, let NQ kind of do what it does and then see if you can find let it consolidate, I guess, for a few minutes before you try that knife catch type long off maybe early in the session low like we've been seeing. We've seen the V's so many times. It's hard to not want to try to long it, but sometimes just waiting an extra 5 minutes can save you from a daily loss limit or a violent stop out and actually give you a pretty good day if you can catch a chunk of that move up. So a little easier to do in ES, to be honest, but NQ, I know we all still love to trade for whatever reason, even though it beats us up every single session. Let's jump over to GC, which is actually in a very, not necessarily precarious spot, but an interesting spot where I don't really have a great edge on the shorter time frame of this week as far as long versus short. I mean, I'm still bullish GC. I'd still be looking for something to buy personally, but I could see this going either way, just looking at how the last 3 weeks have traded. And now we're kind of in the dead center of this 3 week. Actually, let's do this for fun. Let's look at the last 3 weeks of volume profile all together, shall we? Yeah, so pretty much in the dead center of that when we actually look at this. Point of control a little bit lower down towards 2650s, but in the middle of all of this value area from the last 3 weeks. So like I said, kind of in no man's land. It's hard to really have a real edge in this spot. If I was looking to long it, I would probably be looking somewhere between 2638s, maybe 2640s, up towards 2650. Naturally, that round number, but somewhere in that 10 to 12 point range is probably where I would try to long this if I wasn't already, looking to long from this low. If I was still long from that low, that would have been awesome. But like I said, you're in this middle of this range since we've been kind of breaking out above since we got back above 2600. Just been, went to retest 27, failed, came back down to, inside the 26s. And then last week was pretty much just chopping around in a tighter range. So like I said, just tougher to have any real edge on direction at the time being. But for me, I'm still looking for longs in GC. That's what I did in the 2 weeks ago. And that's what I'd be continuing to do. I just think the all-time high most likely is going to get taken out again, but it doesn't mean we're not going to go fall back inside of 2,500, for example. And if we did, I'm probably looking to long that with both hands with some micros for a longer time frame swing personally. But as far as intraday going into this week, if we're trading, my live account or XFAs, whatever you guys are doing in combines, you be looking to buy this lower. I'm not looking to really short gold here at all, but I'd be looking to buy it a smidge lower than this, kind of closer to that, like I said, 2630 to 40 to 50 spot, depending on how violent potentially any sort of move to the downside actually would be. But even looking at this on the longer time frame as well, like, yes, we're consolidating, but these point of controls for the last 3 weeks, not much, but they are still trending higher. So you kind of went down, you retested that low, and we're just building volume back above 2,600. So I'm still leaning to try to find a good spot to long gold. All right. My least favorite thing to talk about, because it just won't move, is going to be crude. I don't know why, with all the geopolitical headlines going on in the world, that we can't get some more volatility on a wider time frame. Like, look at this. It's just week after week of chop and consolidation. And just like we had said, I think last week, the same case is here. I don't have a great edge to look at this and be confident in either direction. I could very much see buyers continuing to defend that kind of 67 spot. And I could see sellers finally wanting to break out of this consolidation and send us back down towards, the 64s. Either way is equally possible. And someone smarter than me actually pointed something out. If I jump over to the 4 hour, I don't know why I'm doing it this way. I'm not good at that. If I jump over to the 4 hour in crude, you do see, I know the volume profiles make this annoying, but you're in a bit of a downtrend here. Going back towards the middle of the summer, you're just seeing us continuing to kind of move a little bit down. If I drew a Cran line, I mean, it's not going to be pretty. It probably isn't that accurate because I'm not that great at Cran lines, but even just going back to end of September, you've got a decent 4 hour trend line to the downside there, just eyeballing it from this point of view. So just something to keep in mind. I know I'm still, for some reason, I guess it's the geopolitical side of the energy markets, more or less, but I'm still personally looking to long it. I want to see this move up above 72s with some enthusiasm, and it just hasn't happened for weeks and weeks and weeks. The more I keep saying, longs around the 67s to 70s, and it kind of works for a week, and then somebody just slams the door up at 72s. So the same thing is true here. It looks like for some reason we continue to be in a longer time frame downtrend. So something to keep in mind if you are longing crude is that is entirely still possible. And we may have just in the last 2 weeks went and retested that trend line if I were to draw one, and we may have just rejected off of it. So something as stupid as a, Cran line drawing like that still works. It still gives you a longer time frame perspective of the trend. And right now the trend seems to be consolidation to the downside. So if we're looking for longs, just be careful. I'm not necessarily, the more we knock on consolidation ranges either way without breaking through them, the less confident I am to, in this case, like catch the knife down here at 67s. If this breaks, it could break very violently to the downside. I would not be shocked, like I said, if it was to go retest this low back to September. It's entirely possible, just what we know about the way markets move and the way consolidation ranges work. When it does finally break, you usually want to be on that side. You don't want to be trying to catch it. And the more we knock on it, like I said, the less safe I think it is to continue to try to catch that around 67, 66, 90s, I think is this low volume, or excuse me, not low volume node, value area low, rather down here. Yeah, and that basically is the low from a couple weeks worth of volume profile too. So just something to keep in mind. If I was still trading, if I was trading crude, which I don't trade crude, I'm still trying to catch a long in the bottom edge of this range, but I have less and less confidence. As soon as someone pointed that out to me on the 4 hour last week, I kind of scratched my head and I just kind of said, like, how did you miss that for the last few weeks of just not noticing that we are kind of making, I guess, lower highs week after week going back a couple months. So that's my little tidbit there, but it's very possible with, months of consolidation that we could just continue to kind of be range bound between whatever this is, a $5 range in crude, between 72s and 67s. We could just continue to chop everybody up and give nobody any sort of real trend direction that we can actively be trading outside of a single session or a single, shorter time frame. So still for me, not my favorite asset to trade. I actually 2 weeks ago, I was actually loving trading gold for the first time in a long time. So I may look at gold this week too, if we can kind of get a little bit lower, like I said. But crude still does not interest me for the time being. I can't even eyeball a decent, shorter time frame, session by session type trade. I can't seem to catch one of the moves, and then I get chopped up, or I just fold it for a couple points in some combines or things like that. It just has not been a well-timed asset for me to trade and actually get a decent move out of it. So let's see. ES coming off the, I guess the Friday high there, the all-time high, sad rejected off the air horns there. Did we make a new all-time high in Globex? No, I think it's 58s. Yeah. So we're falling back into the previous week's range, kind of, retracing some of that ridiculous move by our 401ks on Friday. So no shocker there, as we said. If it comes back down into the 30s, that probably is your first attempt to long the S&P, but we'll see what happens. I'm not looking to jump into a ton of trades to start this week, especially because I'm in live account jail for the time being. I guess if you haven't heard the news, so we can only trade our live accounts if we have one, unless you still had active XFAs. My last bucket of XFAs got dumped into my live account last week, and I made the decision that I want to be able to show you guys my trades live on TopstepTV. And one of the ways to do that is to trade on TopstepX. So I am officially in the process of moving my live account to TopstepX from MotiveWave, from Rhythmic. So now you guys will actually see me execute on my my live account, when I think I haven't been showing it as much the last few weeks, months, whatever it is. So now you guys will actually get to see me, just like you see Coach Dakota trading his live account. You'll be able to see me trade mine on the air. So I made the decision to move it over because I wanted to make sure you guys are able and so everyone can see what I'm doing and actually watch me do executions and actually trade it live on TV. So that should be a fun little time that we're going to have, but it may take, with the holiday, it could take another day or two before it's actually, up and running. So maybe next week when I'm on, we'll see when I'm back on Fast Markets. We're kind of transitioning me slowly after the birth of my child back onto the shows here. So, but next time you guys do see me actively trading like on Fast Markets, you'll see me with my live account on TopstepX. So it'll be a bit of a transition for me, but I put up a nice little streak the last 2 weeks as well. To continue to kind of build that balance a little bit. So I've been having fun. I've been just kind of doing not necessarily a new strategy, but a strategy that's just around like 1 or 2 trades the entire day. And if I'm green, let's say after that first trade, I'm done. I lock it up basically and shut it down for the rest of the session. And I've had I think a 10-day winning streak, and my P&L high for the session has been the actual closing P&L in each session. So once I haven't given any money back the last like 2+ weeks of trading. So something new I'm trying, which is truly to 100% walk away after one solid green trade and don't look back until the next session. And it's worked pretty well so far. So we're going to keep doing that. All right. So let's jump over to some earnings. Pretty light week. As we know, pretty much earnings season is on the downswing now that we got past Mag 7, and now that we got past the Lord and Savior of the S&Ps, the NASDAQ, and the Dow, Jensen and NVIDIA's earnings, we now kind of move into a few of the other smaller names, but still can possibly move the markets. The biggest one this week is going to be Salesforce. If you don't know them, they go by CRM, and they are a member of the Dow. I think a lot of people don't realize that as well, but one of the largest software companies in the world, and they are a good indicator on our other organizations across almost every single industry in the world. Are they spending on enterprise software? Are they spending on their business applications? It just kind of gives you a good pulse on, are they still growing? Are they still, seeing companies continue to add wider to their tech stack? Salesforce pretty much does everything from emails to, obviously sales software to marketing software and a million other things. And then Uncle Mark has thrown the stereotypical AI phrase around so much, and they're doing a bunch of new things too. So I'm curious to see their earnings as well as their earnings call as well. But another good name in that space. Then you have Okta, you have Zscaler, you have SentinelOne. Just to kind of round off the rest of the different side of tech, you've got some cybersecurity, you've got Okta, which does a number of things too, as well as Zscaler, like I said, but just another group in that tech sector that, once again, in a collective mindset, can help drive positivity for the NASDAQ and for the rest of the tech sector. Is MP still holding Chewy? Is anybody at the TopstepTV team still holding Chewy? Going back to that whole fiasco with GME and everything, I'm actually curious. But the other ones to pay attention to are going to be not Foot Locker, Dollar General and Dollar Tree reporting this week. We're going to get our little heat check on the lower income consumer as well. So none of these are going to wildly move the markets, but still important to pay attention to, just to get a wider range of, what's kind of going on with the larger enterprise organizations, and then what's going on with the lower income consumer too. Are they still spending? They actually had pretty poor quarters going back. Maybe it wasn't last quarter. I don't exactly remember, but they had a pretty poor showing. I think it was Dollar Tree who actually had the poor showing. Maybe it was, I don't know. Either way, it just gives us that idea of, how the lower income consumer is actively spending, and it just kind of allows them to kind of guide and give us a perspective on what that looks like. So that kind of rounds out earnings week this week. Nothing, like I said, nothing crazy, nothing that's going to wildly move the markets in the after hours sessions, but a couple to still pay attention to, listen to earnings calls if that's your thing. You got Lulu on Thursday as well, but HP as well. But yeah, pretty basic week. On the data and economics calendar front, we have nothing crazy, everything pretty much in the normal realm of stuff we are at this point facing and attacking every single week. If you stay out of the pre-market trade, you don't have to worry about a lot of these, but you do have to worry about the gaggle of Fed speak starting tomorrow in the afternoon. We have Waller, we have Williams, as well as shortly after the bell, we do have ISM manufacturing PMI. Going into later the week, you've got JOLTS, which will be the big one that I think to pay attention to on Tuesday, right before the bell at 8 a.m. Central Time. And then going into Wednesday, you've got ISM services PMI. And then, no surprise, we got Fed Chair Powell. I don't actually know if this is a non-event type speech that he's giving, or if he's going to have any sort of remarks on monetary policy. We'll have to see. I was kind of looking to see what this engagement actually was, but I couldn't find information before I was coming on the air. So we'll have to double check on that one. And then Andre's favorite chore for the interns, go get the beige book, coming out shortly after Powell starts his speech. So as always, anytime Powell's talking, whether it matters or it doesn't, it can always move the markets, as well as any of these Fed speakers. You've got more on Tuesday morning with Goolsbee and Kugler. I mean, that's every day. You got Barkin again on Thursday, as well as initial jobless claims. And then the big ones going to be Friday with non-farm and the unemployment rate and Michigan consumer sentiment, and then another gaggle of Fed speak. So if you missed them during their blackout period, they are back, and they are here to stay for at least the next couple of weeks until we have the rate decision again. I think, on December 18th? I think it's the 18th. I'll have to double check. But in like 2 weeks, 3 weeks, whatever it is. So another lovely FOMC day coming in a couple weeks, just before we all probably wind down our trading into the end of the year and into Christmas and every other holiday towards the middle to end of December. So something else to keep in mind, but they're all back. Anything they say can and will move the markets. It can and will stop you out. It can create those lovely stop runs that you kind of see. With just however they guide going forward as these data releases come out, if they are like on CNBC or on something where they're actually talking about monetary policy, a lot of the time they can get questions around, the most recent, NFP data and then you see them talking about it a couple hours later, and that can potentially move the markets because they truly like to say they are data dependent. I don't necessarily know if I believe that or the market believes them anything they say anymore, but it is something to still always keep in mind. If you are trading, do be aware of when these individuals are giving their speeches or their talks this week, because it can ruin your trading day real fast. It can ruin your trade even faster. So there's a number of them every day. If you're tuning into TopstepTV, Eddie, myself, Hogue, Andre, we always like to continue to call out, hey, who's speaking in 15 minutes, 30 minutes, or they're speaking right now, so watch your stops. So we'll continue to call it out throughout the week, but this is a week where there's a ton of them, and there's one or two every single day at least. So as I said earlier, head on a swivel this week. All right. Let's jump over some options data, and then we can get to some questions and talk about anything else y'all are looking for me to talk about. So as I said, if there are questions, feel free to throw them in the chat. We'll grab them. I will get to them in a little bit, or anything else you guys want me to talk about, go through, feel free to ask, and I am happy to run through it before we jump off here in a little bit. So, excuse me. There we go. On the options front, we talked about last Sunday, how skewed to the north side it still was as far as the net gamma data that we were seeing. Everything was to the call side, and everything was to higher strikes than we are currently trading, and higher strikes than the all-time high. So nothing has really changed going into this week. The big elephant in the room is still going to be SPX 6000. Do not be shocked if we continue to kind of balance and ping pong it a few more times before we finally get a move. You see this on the kind of gross side here. It is the only strike that matters, apparently, outside of the, whatever we see on the 0 DTEs. But on the longer time frame, which is what we're looking at, it's the only one that still is relevant. So it's going to act as support, it's going to act as resistance, and it's going to act as a magnet. So we will do not be shocked if this does not change, let's say on the longer time frame as we're looking at it, like we are, that it can continue to, on something like ES, like pull us back up 20 points throughout the session, or back down towards it, just because that is the largest strike, and that is where price is going to continue to gravitate towards at times. It doesn't mean it's going to happen on the 0 DTE front, but it can continue to act that way. So just knowing this, I'm still leaning towards looking for a rebid somewhere between 6,000 ES and 6,015 as that spread between the SPX strikes and ES price changes throughout the week. That is still kind of why I'd be leaning to try longs there, or try longs a little bit lower for trips back up to it. Just knowing that it's such a large, options gamma strike, and that we're seeing so much exposure still to higher strikes than 6,000, it just leans me to be looking a little more at, trying to find a price, trying to find a long at lower prices rather. So nothing crazy, not much has changed since last week, given the shortened week. So we'll have to see how this evolves going into this week as we get, new positioning going into the last month of the year. I would not be shocked if things get a little wonky in December. I'm not saying it's going to happen tomorrow. I'm not saying it's going to happen this week, but we tend to be very bullish in December, and then you tend to get really weird at Christmas, and things can get violent very quickly. And then we go into the new year and it's like it never happened. Tell out to everybody that wishes they were buying NVIDIA last December. So something to keep in mind. You may find buying opportunities at lower prices in December. Doesn't mean it's going to happen in the early part of the month, but for some reason we seem to have some blood in the streets around Christmas Eve almost the last couple of years. I don't know why, but it seems like we keep having that. All right. Let's jump over. Let's see. We're still just kind of hanging around. Nothing crazy going on in futures. Actually, a very quiet Sunday open compared to last week when we gapped up and just kind of ran for a little bit. Let's get to some questions. How about that? Like I said, if you got some questions, throw them in the chat and we can get to them here. All right. Sorry, I lost where the questions are. Okay, now I got them. All right. What about the gold deposits found in China. Wouldn't that bring down the prices? I actually don't know a ton about it. As far as what happened there and how it may affect the price ultimately. I mean, I think at the end of the day, we have no idea how much reserve there actually is. It's more of a, in my opinion, my logic of continuing to look for longs in GC for a trip to 3,000 is more the inevitable like type recession trade that I think we're eventually at some point going to go and get. And I'd rather be long gold. And I also think eventually with how euphoric Bitcoin and all the other, garbage it has been, you may eventually see rotations out of something like Bitcoin and some other assets into a more stable reserve like GC or like the other, gold indexes and other things that you can actually continue to buy in your portfolio too. So that is kind of my logic. It is still, when things are a little weird, when we're in this kind of, cutting cycle, I would rather be long gold than looking to short it personally. But as far as the supply and demand thing, I mean, some of that is so psychological because we actually have no idea how much is actually in reserve and how scarce it actually is. So it's truly a trade. It is 100% just based on how I think it could move over the next few months, given the Fed's cutting cycle, given, the whole inflation curve we've kind of been in. So, yeah, that's kind of the logic based on that. And I'm not saying by any means I'm looking to short Bitcoin. It's more once again, the rotational trade out of certain assets into others. That's all. Hey, Nick, how do you set the market profile for micro Bitcoin? Does that not work? Let me see. It still does. It works exactly the same. So all you need to do, jump over to volume profile, fixed range, and just drag it across the candles you're looking for. So this is a weekly one that I do every Sunday with you guys. And you can just draw it that way, or you can add the visible range right here. That will just look at what candles are actually, what is actually on your chart, and we'll spit out a volume profile there too. So it's looking at all of the volume that was traded in micro Bitcoin from the CME. So that's all it's doing. I did have some fun trading micro Bitcoin in a combine. I actually passed it. I made like $2,000 trading it, whatever it was, a couple weeks ago. But that was fun. It was a stupid little adventure I went on one day because it was moving just like anything else. Sometimes as a trader, you're looking for like, what is volatile? What's moving? What can I, capture the most points out of? And in that current session, it seemed like it was going to be Bitcoin as we were breaking out to, I think it was above 80,000 when I was doing it. It was a couple weeks ago. All right, back to yes. How do you practice discipline? I'm not sure exactly if that's what you're saying. But some of it kind of comes from experience and dealing with failure and learning kind of what is that tilty thing that gets you out of your game plan, more or less. You have to kind of identify that in yourself. Like, what are your triggers? If you don't know them, then there's nothing to, in theory, practice or work on not doing. Discipline, it really comes from just screen time at the end of the day and knowing yourself more than anything. I don't know. We all struggle with it. It's one thing I'm continuing to try to work on. And part of the benefit for me of becoming a new dad was I don't have there's a couple of reasons, but one of the luxuries of the autonomy that trading can offer can also be a curse in that, I'm always glued to screens. I'm always glued to price action. So I've been trying to work on my discipline of, like I was saying with my live account, getting one or two good trades and completely shutting it down for the day. Doesn't mean I don't have to watch price action, but I don't have to sit here day in and day out, hour after hour, because that can lead to me jumping back into a trade when I turning a green day into a red day because I don't have the discipline. My ape brain will turn off because I see things moving. And then suddenly I'm just, jumping back into a trade for no reason without a proper setup in theory, because I already took the right setup for the day. And that's something with discipline I'm always working on. It's just not over trading. It's being able to walk away, not getting greedy, not having P&L in the back of my mind as the only thing that matters, and trying to just continue to grow the account. So discipline can come from a number of things. It can be the number of trades. It can be the amount you make. It can be the amount you lose in a session. Having more, I would say there's a lot of traders who probably have better discipline than me as far as turning a small red day into a big red day, which is one of my problems. I can be club DLL sometimes. So, and there's nothing wrong with that. It's just the way my risk for how I hold myself accountable for my own risk settings. But it doesn't mean that's a good discipline strategy, where if I'm just not seeing the market, or if it's like day 2 in a row where I've missed 3 trades in a row the previous day and got locked out from a DLL or something, and then I get back in the next session and I miss my first trade, and I just am clearly not reading price action well, the good discipline would be shut it down, come back another day, rather than continuing to potentially snowball. So discipline can mean a number of things. So you just kind of need to know yourself, know your triggers, and know what you need to work on. And then you kind of need to be an adult, be a big boy or girl, and hold yourself accountable. Cause it's one thing when you have something like Topstep and there are some pre-built risk settings into the platform itself that you are actively trading, but there's no one to hold your hand in a true live account on a real brokerage with your orders hitting the tape. There's nothing to stop you from having let's call it a 10K futures account and taking that to 0 in a single session. That's on you. So part of it is just, you have to be able to understand what is going to set you over the edge, what's going to make you go tilt, and then, trying to correct that and just know yourself. What week in December do you generally stop trading, or do you trade whenever you see setups and limit your risk closer to Christmas? This is actually a really good question. I have had a mentor who does not trade, or who's always said he stops trading pretty much after the October volatility kind of drives up, and, just shuts it down pretty much for the rest of the year, outside of a couple things here and there, but does not overtrade, does not actively put on large size positions or anything in November and December, just because it's just it can be a tougher trade. So I haven't found a good rhythm and flow with this just yet. I would like to not trade the week of Christmas, just because in my opinion, it's a good time to spend with family and do other things and travel and do all the other fun things. But I'm going to be here for the first time in a long time, as far as, I'm with a newborn. We're not traveling yet. So I will be here. If I see a good trade in, anytime throughout this month, I will take it if I'm at my desk. But I'm also just trying to practice my own level of discipline, which is just, hey, walking away. And if there's a trade there, I'll take it. If there's not, I'm not going to force it. And that can mean me walking away down a couple $100. And that could also mean me locking it up $100. I think I had a day last week that was like $120, and I took one trade. It was pretty much a scratch, and I didn't take another one. So it really just depends. I think limiting my risk is definitely something I would like to do, is just not lose too much. If I start getting red, I'm definitely going to shut it down until January. But it really depends. We'll see what this month brings. If there's some good opportunities, I think it can be a very profitable month for everybody. If we get some typical, bullishness to start it, and then some volatility heading into the holiday week, that's a home run. There's going to be opportunities to trade if it's anything like last year's December, but we don't know. We have no idea what this brings. We're at an all-time high. It's hard to make too much of, looking for too much downside in this current regime we're in. So I hope for a two-way trade, because that's a trader's market, and that's how you can make a lot of money both ways. If you can read price action well, and you can evolve beyond just looking for longs or only looking for shorts. So I love two-way trading. It's the easiest way I have good weeks and good months. So we'll see what it brings. I don't have, like I said, much of an edge going into this month specifically. So I'm going to just kind of take and see what comes out of it. But for the time being, I don't want to be trading towards the end of this year. I'd like to be able to spend some time with my family, enjoy the holidays, not be thinking about I lost too much, or, worried about managing even my personal account trades. I might kind of flatten out a lot of it anything I'm still holding. I don't have much on right now for the same reason. I just had a kid and I didn't want to stress about any sort of position. So I did close a lot of things that were more short-term outside of my kind of long only stuff. Everything's closed. So we'll see. I may change that mindset here as I get back into the markets and more of a full swing this week, but I don't know. My recommendation still would be, you know, if you're green, for the month, for the week going in towards Christmas, lock it up, guys. There's no shame in kind of coming back in January with hey, I finished December strong. I didn't overtrade. I was green, and continuing to kind of move on and start January in a great mindset to start 2025. Nick, what is your year-end target for NQ? I have absolutely no idea. You guys know me. I sometimes, with NQ specifically, man, I operate on a minute by minute basis with this index. If I had to guess, I guess if I'm making a call, we're going to go, this is my bold claim. We're going to go retest 21,100 at some point this week. I think we're going to fail somewhere between there and 21,200. And I think the high is in for the year. That's my call. I have no idea where price goes from there. But if I was a betting man, I think we fail trying to make a new high at some point in the early part of this month. And then we consolidate and maybe kind of close somewhere in this lovely zone here between 20,300 and 21,000. This very large high volume, this volume node here, this value area, excuse me. I think we'll close somewhere in an 800 point range. So how's that for a prediction? I have no idea. Honest to God, guys, the way this thing moves, we could be up and down 800 points in a session. So I don't know. I do think the high is probably in for the year. And that's a bold claim given where we're trading, because we're only like 500 points almost away from it. I think that's 4 and change. We'll call it that. So we could be there tomorrow and I could have egg on my face, but we'll see. I'm going to just go on that towards that kind of prediction. You had a nice move up. We'll see if we can continue to build up here, but all of this consolidation at the new all-time high in the NASDAQ and then failing, I'm kind of just basing it off that. And that was after the ridiculous rip on election night and then the continued move in consolidation that week. So I have no edge. I have no idea where we're going to close, but my guess is somewhere in the value area that we've been trading at for 2 months is probably where the year is going to close. All right, guys. So that is the last of the questions. I will pause there for a second as I do my recap. If there's more you guys want me to go over, we can talk about it. Happy to dive in deeper, but let's recap my ES plan for the week. So as I said, if you got more questions, throw them in the chat. Pretty light question week thus far. I know it's Sunday. I know we're coming off the holiday week, so no surprise. Seems like a little lighter going into this Sunday session, but let's recap just for everybody that's looking for the quick tidbits. If you came in late, on ES, we closed at an all-time high. We hit an air horn on Friday. All of our 401ks pushed us to a new all-time high. No surprise. Everyone's pension and grandmother's retirement buying the all-time high. If we got any sort of weakness here, that always sucks to see. But you know, like anything on a long enough time frame, it really doesn't matter for some of us in our 30s and 40s. You got another 20 years before you even care about what that looks like. And I can promise you the S&P will be at a new all-time high before I need to retire. So with that being said, at all-time highs, if we got a rotation back down lower to start this week, the big area to watch is going to be around 6,020 to 6,015 is basically going to be the SPX 6,000 level. That may change within a few points as that spread continues to get more narrow throughout this week. But that's the first place I'd be looking for more consolidation and chop and misery for us traders, just given the large options activity that we're seeing at that strike. It shouldn't surprise anybody that we may just continue to kind of chop and consolidate at this point of control. Basically, it is the point of control for November. Basically, is this like 620 to 615 spot. So I would say that is not an area that I would love to initiate just because you may sit in a trade for 3 hours. That is why my pivot is basically at the previous week's low. It's hard to get too bearish unless we see some sellers really step on the gas below 6,000 at ES. So I put it a little lower. I'm probably not looking to really sell this thing down outside of scalps here and there unless we are below 6,000. So my pivot's going to be lower for the week. But another one you could use is probably going to be that 6,015 spot. So if you continue to kind of base and build there, we'll go hit an air horn. We'll go make a new all-time high, I'm sure. But if we were to lose it, 59.80s is the first spot to be looking for buyers to step in and defend. If not, we are probably talking about rotating down lower towards the 59.20s spot all the way down to 5,900 is like kind of a low for the week possibility. But we'll see. We've been in this range for a couple weeks. It's hard to make too much of it. So like I said, no edge for me specifically this week, but I'm more so leaning with the options activity and with how much of a magnet 6,000s being. If I don't see sellers really looking to reoffer and send us lower, I'm looking for longs somewhere between 59.80s and 6,000 ES to try to go make a new all-time high in the session. That's how I'd look at this. That's how I'd attack it. But we'll see. We shall see. I've had some pretty good weeks trading this the last couple weeks. I know it's been choppy and kind of up and down, but there has been some very tradable action at times. So hopefully that continues as we head into December. I don't even remember how I did last December. I know I think I lost a live account in November, my first live account with Topstep. And then I got it back in January. So I don't know how I traded in December last year. I'd have to look, but that's kind of the plan. Looks like we got one more question. I don't know if this is trolling. Why do all my trades immediately go in the wrong direction? Have you tried inversing yourself, sir? That's actually really funny. But if that is actually true, maybe do a little reverse psychology, do a little level 3 data and inverse yourself would be a bit of my advice. Sometimes that is the best thing to do. I have sometimes think every once in a while, if I just took the opposite of my initial gut watching price action, I would be a very profitable trader. That's not actually true, but sometimes the first, eyeball gut decision as you're watching price action, if you're more of the type of trader I am, your first instinct is almost like a knee jerk versus you actually dissecting price action and then making the right decision. Also, if you're patient, it helps a lot more too, but sometimes, the market does not go in your direction immediately. It has to move against you a little bit. It has to just make you sweat a little bit. Doesn't mean your trade's wrong. But that's why I recommend trading ES. You'll know very quickly if you're wrong versus NQ. You can be right and also still be wrong and have a lot of pain to show for it. So, but yeah, guys, that is the prep. And I'll hold for another 30 seconds or so to see if there are any more questions. If not, this has been fun. It's good to be back with you guys. I'm excited to slowly make my way back on TopstepTV with you guys. Hopefully we're going to do some more things, have a little more fun. It'll be fun that you guys actually get to see me trade my live account now going forward and like we used to, and I think everyone was enjoying. So hopefully get to see me and Coach Dakota tag teaming on fast markets again with our live accounts, looking for some good trades here in the coming weeks. But lighter week for me on TopstepTV. I'll be on Wednesday, I think in the afternoon, doing one of the sessions. But I hope everyone enjoyed their holiday weekend, their extended break from trading. I hope everyone took it seriously and didn't trade on Friday. I'm sure a lot of you still did, but hopefully you enjoyed some time with some family, some time with some friends, some good food, some laughs, some great college football yesterday. That was actually a lot of fun to watch. It's always great when you see passion. And if you don't like somebody planting a flag at your 50-yard line, then defend your own house and don't give up, or don't let 21-point underdogs come into your home stadium and beat you like that, would be my last little tidbit. But enjoy the rest of your Sunday, guys. Everyone take care. Everyone have fun. Tune in to Coach Dakota on Slow Markets here in about 90 minutes. He will be back giving you his perspective going into the week. It's good to be back with you guys. I can't wait to have some more fun and continue to trade with you all here in the coming week. I will be definitely active in the TopstepTV chat and, throughout Discord and other places too. So if you guys need anything, you know where to find me. Have a good night. Trade safe, trade smart, and I will see you guys later this week.